Seasonal patterns. We talk about seasonality all the time on this show. And let's pull up our first chart, actually. And we're going to see that which months of the year are the best for investors' return. So on the left-hand side, you have January up 1.1%, April up 1.5% average return. And as we've said many times, November up 1.6%. The best month of the year, just ahead of April, but by far a lot higher than most of the other months. And on the right-hand side, you can see best to worst for these months. Standard deviation, meaning how much it's fluctuated over the years. You can see October, a lot of fluctuation because normally we come into October on a sour note. And then by the end of October, after Canadian Thanksgiving, things change for the better as we tend to focus on the end of year shopping, US Thanksgiving, Christmas, and things tend to look a lot better. So the volatility in October tends to be a little higher. But let's take a look at our next chart, which I think says it all. Everyone's asking, is this year a regular year with respect to seasonality? Well, this chart tells you, no, it's not. And why is that? Well, take a look at the chart. We saw a very big pullback in the month of April due to tariffs, tariff announcements. But normally, April is the second best month of the year for returns. So seasonal factors did not play in this case. And that saying, sell in May, go away, come back in October, November. Well, if you did that, how much of the gains would you have missed? It would have been a tremendous miss. You would have had, well, you would have lost out on a lot of this year's gains. We know the market at one point was down 20%, S&P 500. And by the time we got to November, the S&P 500 was up 15 to 17%. What a massive turnaround, 35, 36% turnaround for the S&P 500. November, usually the best month of the year. What have we seen so far this November? A choppy market, a market that has gone down the last couple of weeks. And hopefully it'll have a good last week as we have a short week this week, as I mentioned, due to US Thanksgiving. The markets will be very quiet. But the first part of this week, Monday and Tuesday, and even today, before we came on air, markets were higher. So are we following seasonal patterns this year? Absolutely not. Why is that? Hard to say. Perhaps it was the tariff announcements. Perhaps it's geopolitics, the political climate, political environment. That's kind of throwing the market for a bit of a loop. But overall, seasonal patterns usually exist, usually are correct, happen more often than not, as we can see. But for whatever reason this year, maybe it's politics, as I said, just doesn't seem to be happening. So whenever an investor says, should we sell in May and go away, or, maybe we should sell out as we're approaching August and September, just understand that these patterns are there because, yes, they happen more frequently than they don't happen, but you just can't always assume that these patterns will take hold. And this year is a perfect example of a time where they don't.